All right, Accounting 2, we're back. So this week I want to cover Chapter Section 8.1, which is adjusting entries. Yeah, we've done that, but we haven't journalized them. So I've got to show you how to do that and update the general ledger accounts with the adjustments we made on the worksheet in Chapter 6. Well, we're going back to Chapter 6, yeah. So the second thing we're going to do is Chapter Section 8.2. What we're going to do is go ahead and use the income summary account to close out the temporary accounts for the fiscal period. So what we've got to do is go through, and I've got to talk to you a little bit about permanent accounts and temporary accounts, then demonstrate the process for closing, because we're closing out the books for the month at this point. So that's going to be a little more in-depth in Chapter Section 8.2, but let's go ahead and do Section 8.1 at this point. So I provided a copy of the text for you, so I want you to go through and read it. We've got some key vocab, adjusting entries, which of course you know. This is straightforward journalizing, but again, I want you to go through and look at it, key concepts, matching revenue and expenses from the double entry accounting standpoint. I'm not going to do character counts, and I'm not going to talk to you about a resume since we've beaten that horse to death over the last couple of years. So what we need to do, though, is we need to go through, and anything in columns 3 and 4 on our worksheet from Chapter 6, we need to go back and journalize. So I'm going to go through the presentation real fast, then I'll demonstrate the work together. I've provided copies of the keys for the work together as well as completing them. So let's real fast go through the PowerPoint. You've got copies of the PowerPoints as well in PDF, so you should be good to go. So central question is how are adjusting entries recorded on a worksheet? And our objectives here are primarily to record the adjusting entries for service business organized as a sole proprietorship. And our Common Core standard here is to journalize and post adjusting entries to get to the meat of it. Ooh, one term. I think you guys have figured this one out. Okay, so I'm going to go through this and just kind of get your minds working again. So what changes did we make to the worksheet when making adjusting entries? Well, we had to update the supplies, office, and the prepaid insurance because we used them over the course of the month. And remember, we had two sections. We had to update the asset account, and then we had to make a corresponding entry to the expense account because we have to match revenue and expenses. Okay, now you think of it, assets do tie to revenue. All right, so this is what it looks like. This is an entry, but I want to call something to your attention here, and I'm going to start the slides to show up. Okay, when we're doing adjusting entries at the end of the accounting period, we are starting a brand new journal page, brand new. So even if we use one line on page 2 of our journal for the month, we start a brand new page. So what you will notice about this is that there is no post reference, there is no document number here. So what we do is we create an account title, adjusting entries. This is the source document. This indicates to us that these are accounting entries to close the books at the end of the month. So keep that in mind when you're going through this, because we got to label everything since we don't have a source document. Other than that, this is straightforward journalizing. Date, debit, credit, source document. Say it with me. Date, debit, credit, source document. Okay. So you write the heading, adjusting entries, date, debit, credit, source document. Okay, the adjusting entry for prepaid insurance is identical. You guys know the drill at this point. We've done this enough that I'm not going to belabor this. But again, right below the supplies entries, we do the prepaid insurance entries. Remember, debit entry always goes first, so we're going to be recording our debit entry first. And this is why I've asked you guys to make sure you're putting the alpha character next to it so you can easily identify which applies to which. Accounting 3 is getting a real taste of what this looks like because we've got through H at this point on our alpha characters for adjusting entries, and it's messy, and putting the character there makes it easier. Okay, so same deal. Date, debit, credit, and our source document. Well, there is no one because we've got the header here. Okay. So why do we adjust? Why do we record them? Well, because we haven't done so yet. Whoops, sugar. Let's go back up here. We haven't recorded these entries. We made entries on the worksheet that we need to record. So where's the information? It's in the adjusting entry columns on the worksheet. Okay, what accounts are increased from zero balances after the adjusting entries for supplies and insurance are journalized and posted? Well, these are the expense accounts. So we have to record a debit whenever we make a credit entry. So that's where we are, guys. Easy enough. Now let's go into ACCII here, and let me demonstrate for you. All right. So let me get my workbook here. Yep, got them at home. So you got PDF copies of this. I want you to continue to just take pictures and post them. That's the easiest way to go about doing this. Okay. So we have entries we've got to make here. So our first one is adjusting entries. And then we're at the end of the month here. So we're looking at July. So July 31st. Okay, and we need to adjust supplies first. I don't even have to look at it, just supplies expense. And then supplies. So pull up the problem here real fast. And take a look. Hopefully you guys can see it. So our supplies adjustment was $713. So we're just going to go through here and we're going to plug in $713 here. And we're going to plug in $713 here because we are reducing the amount of supplies that we have. We're going to do the same thing for prepaid insurance. So insurance expense. I'm getting ahead of myself here. I'm going to set it up. Here's the other thing we got to do. We got to update the general ledger accounts because we haven't done that yet either. So I want to, before I move into the insurance, I want to go through and I want to update the related accounts here. So supplies 140. Now we need to make another entry. Okay. So on the 31st, we are going to put a 4 here. Okay. And we're going to put, what are we going to do here? We've got a debit entry for, we've got a credit entry, 713. So it goes on the credit side. Now, what do we do here? Well, we gotta do some math here. See if I can do this in my head. So 900, I think it's 250 if I can recall. If I can do the math in my head. All right. So then we go back, and then we gotta make an entry here. All right. For post reference. So we don't have a document number. We don't have a source document. We do have a post reference here. Okay. Let's go and do the same thing for expenses. Our supplies expense account, if I can go down and find it, this will cooperate with me. Oh my goodness. There we go. Supplies expense. So this is our first entry here. We're bringing it up from 0 and we're making the entry at the end of the month. So we got a debit entry here of 713. And if you want to know, hey, how much money did we spend on supplies in the month of July? Well, guess what? Our general ledger is going to tell us. Okay. So we got one more line, which we're going to use in A2. But for now, this is all we need to do with this. Okay. So let's move on. Go back here. Last entries go back to post reference. So let's go to insurance expense and insurance. And I've got them mislabeled, don't I? Okay. Oh, I don't want insurance expense. I just want prepaid insurance. There we go. Okay. All right, so let's go to the insurance expense account. And we'll pull that up so it's ready to go for us. All right. Same deal. We don't have any entries here in the expense account. So what is our insurance expense adjustment? Well, we, I believe, have $300. So we need to debit it for 300 and then credit it for 300 over here. Okay, and then we go down here and we journalize July 31st. And we're going to look at journal page 4. For the expense, we're obviously going to debit. And new balance here is 300. So this one's copacetic at this point. All right, so let's go back up to our asset accounts, prepaid insurance, and do the same thing with it. So 31st. Okay, 4. And then we're going to credit it. So we've used up $300 worth of insurance. We still have $900 left. So we still have $900 of this asset. So what this demonstrates, guys, moving into the next chapter section, is we got a couple of things here. On the asset accounts, we don't have another line, which means that this is the balance remaining in these accounts. These are called permanent accounts because they're asset accounts. So all of our balance sheet accounts are assets, and our liabilities and our equity get carried over to the next month. So we're going to close them out for the month as the ending balance, and they serve as the starting balances for the next month. Okay, the revenue and expense accounts, well, we close them out, and we use the income summary to close them out when we get ready to do that. So what we've got to do is close out the balances on the expense accounts and the revenue accounts to zero. We use the income summary for that, and I'll show you that in a minute. So let me finish up here. 150. And what have I done? I've forgotten the 520. Okay. So we will move on. Okay, so that's what I had here for this. And as far as 8.1, that's it. So take a stab at it. This is easy. But remember, you got to journalize the changes. Then you've got to go to the general ledger accounts. That's the messy part. And it gets a little messier when we get to 8.2. So what I want to do then is go ahead and move into 8.2 at this point. Let's bring up the textbook here. So jumping right in. Wow. Permanent accounts and temporary accounts. So you guys need to know these. These are terms. So permanent accounts are also known as real accounts. And these are accounts that carry the balance over from month to month. For our purposes, that's what it means. The ending balances serve as the beginning balances for the next fiscal period. Okay. Temporary accounts are also known as nominal accounts. These get closed out at the end of the month. So it's our revenue, our expenses, and our owner's drawing account. All right, this also includes our income summary. The income summary exists as a process-oriented account. We don't close it out. What we're going to do is once we close all the revenue, expense, and drawings to the income summary, we're going to close the income summary to the owner's capital account. The whole purpose of this is to add in any equity changes based on business operations from revenue, add in any decreases due to the owner taking money out of the business, as well as business expenses. So what we're going to do with the income summary is net those out, and then we're going to record what the change in net worth is. We use the income summary to record the change in net worth or net equity. And then once we've done that, we close the income summary out to the owner's capital account as our final entry for the period. Okay. So closing entries. These are journal entries that are used to prepare the accounts for the next fiscal period. All right. Matching revenue with expenses. Where we have one, we have another. Okay. And this is a little bit tricky, but that's okay. So let's talk about income summary for a while. This is our magic account. And this is a workhorse account. So what we do here, we have to have a quality of debits and credits. So if we are closing out our expense account, what we have to do is make a credit entry. This is about the only time we will ever make a credit entry to an expense account. Remember at the beginning of the year, I told you not to do it. If it's an expense, you automatically know the normal balance is debit. This is the one exception whereby we will be making a credit entry in the expense general ledger account to reduce the balance to zero. Well, okay, so where do you put it? You got to put it somewhere. So when we make the credit entry, say $300, we have to put a debit somewhere. Well, we put the debit here on the income summary. Okay. So we do that for each of the expense accounts, every single one of them, and then we sum them up. And then we go through and we pull all of our credit accounts. So we got to go into revenue. We make a debit entry, okay, to close out the account because the normal balance is zero. But we got, again, you got to match a quality of debits and credits. So you got to have a credit entry somewhere. So you enter the balance in the revenue account here as a credit entry. All right. Now, there isn't a normal balance for this, guys. So whichever is larger, well, guess what? What you've done is you run the math on it. You look at which one's larger. You subtract the smaller from that, and you re-verify your net income or net loss by doing this. So the steps are, you need an entry to close the income statement accounts, which are, guess what? Chart of accounts, income statement, revenue, expenses, okay? And your owner's drawing. Okay, then you need to close the ones, sorry, so let me start over again. So you need to close the ones with the credit balances. So your first step here is to close out your revenue account. Your second step is to close all your expenses and your owner's drawing account. Okay, then you got to have an entry to record net income or net loss. All right, and then you close the income summary, which you do. Okay, so if you have net income of $1,099, well, your net income is going to show up in your credit side, I believe. Let me double check. I'm trying to remember this off the top of my head. Yeah, so if it's on your income summary shows a balance on the credit side, it means you got net income. Okay, so what you've got to do then is you have to close that entry out. So let me pull up the organizer that walks you through this. Okay. All right, let's talk about these. So first, this is a cheat sheet. Close the income statement accounts with credit balances. Then close the income statements accounts with debit balances. Then record the net income or loss and close the income summary. Okay, so you have to make the entry. You got to net them out. You got to run the math. And then finally, you close the owner's drawing account to the owner's capital. Okay, so you got to close the income summary to owner's capital, and then you close the drawing account to owner's capital. All right. So what does that look like? Well, I'll show you that in a minute because I got another organizer I want to show you. This is going to help you kind of understand what temporary accounts are and what permanent accounts are. So this schematic shows you, okay, the permanent accounts are the balance sheet accounts. It's a way to keep it straight. The temporary accounts are the income statement accounts. All right, so your balance sheet accounts in the chart of accounts are going to have a balance. Your temporary accounts are not going to have a balance at the end of the fiscal period. These get carried over as the starting balance for the next fiscal period. These start out as zero at the beginning of every fiscal period. Okay, so let's go through this. I want to go into the PowerPoint a little bit. And this is kind of just restates what we've done here. Move this down just a little bit. All right. Okay, just take a look at this and make sure you understand this. All right, so if we were doing this in class, I'd make you go through the text and develop text questions for me. This is a little bit different than what we've done before, and it's you've got 2 and 3 levels of thinking you've got to do on this. So this is a reinforced. If you want to do that, fine. Don't worry about it if you don't. You guys probably get it. So again, permanent accounts are permanent and temporary are nominal. So permanent accounts, the other name for them is real accounts. Permanent accounts equal real accounts. Temporary accounts equal nominal accounts. Okay, so temporary accounts get closed. Real accounts, you carry the balance, and you open a new journal page. You open your ledger accounts with the balance on the real accounts with the ending balance from the prior period. Okay, here's that organizer again. All right. So why do you do this? Well, you got to prepare the balance for the next month. Okay, if anybody ever asked you, then this is something you probably see on a certification exam for CPA. What's the balance on a temporary account at the end of a fiscal period? 0. That's a rule. It's a math rule. So how do you close it? Well, you make an entry equivalent to the balance in the temporary accounts. So if it's a debit account normal balance, you make a credit entry. If it's a credit normal balance, you make a debit entry. Again, it's just accounting logic. Okay. So how's a closing entry made? Well, you debit it or credit it, depending on what is necessary to zero the balance. So which account do you use to do that? You use the income summary. What's the normal balance for income summary? This one's special. There is no normal balance for the income summary. There isn't one. This is a working account. It's a process account. The only reason this account exists is to use to close the books at the end of the month. That's it. All right, so after all the closing entries have been made, what does a debit balance show on the income summary account? Well, it means you had a net loss. So again, one of those questions, if you have a credit in the income summary account at the end of the fiscal period after you've made all of your closing entries, what does that mean? Well, it means you have net income. That's one of those things you might see on a certification test at some point. So credit net on the income summary is net income. A debit net on the income summary means a net loss. It's just the opposite of what we did on the worksheet, where we recorded net income on the debit side and net loss on the credit side. Well, gee, the beauty of this is equality of debits and credits. It's the opposite for the income summary account. Okay. So here is our organizer where we talked about the order in which we're going to do the closing. Credit balance is first, which is revenue accounts and contra accounts and cost accounts. Next year, we'll talk about cost of goods sold, and we'll talk about contra accounts. Income statement with debit balance, so cost, contra revenue, and expense accounts. Okay, we got some other accounts we'll get into next year. Don't worry about them for now. Then we make the entry to record net income or net loss to close it. So whatever the balance is remaining, we make an entry on the other side, and then we close it to owner's capital. And then the last thing we do before we close these books and open a new set is close the drawing account to the owner's capital. So the implication here is that we are going to have 4 sets of journal entries for this process, okay? And I'll show you what it looks like. And if you can remember the sequencing, this becomes a lot easier. Okay, so where do the amounts come? Well, they come from the balance sheet and income statement columns of the worksheet. So again, this worksheet we did in Chapter 6, this is an important tool. We prepare our financial statements from it. We record our adjusting entries, which we make at the end of the fiscal period, and then we go and then we close out the books using the worksheet. It's not a permanent record, though. We do this one in pencil. Everything else we do in pen, but it is massively important. Okay. So where are we? Income summary. Yeah, this is analyzing with T accounts. Okay. So closing entry for an income statement account with a credit balance. This is step 1 in the process. All right. So literally here we are back at the journal. And just like with adjusting entries, we make a header here, closing entries. Okay. So we don't have a source document. We are going to use post references, but we don't have a source document here. So we create the section, subsection header, closing entries, and then we record sales. This is the entry to close out a revenue account. Now, remember, normal balance for sales is credit. So we have to make a debit entry to close it out. All right, so we make the debit entry, but where do we put it? Well, we put it in income summary. That's what we do. It's that easy, guys. Okay, this is straightforward journalizing. All right, all we're doing is think of this as moving the balance from one account to another. That's all we're doing. Okay. All right, now if we didn't have any expenses, that would be our income for the month, but we do have expenses. Doggone it. Okay, so you guys can look at this at your leisure. Okay, closing entries for the income statement accounts with debit balances. This is a little more lengthy. So the process is the same. So what we do is we just kind of add on. But here's what you'll notice. We have a second date we have to enter. This is where's my camera? Step 2 in the process. So we have 6 expenses here. All right. So what do we have here? On the income summary account, we have this entry here first, which is a debit entry. Well, where does that come from? All right. The easiest way to do this, I know I always tell you to make the debit entry first. On the journal, it does come first. Make sure you organize it that way. But what you have to do is you have to add the sum of all of these, okay, and then close them and then go back and backfill the sum of all of your expenses. So we make the credit entry 213 to 213 to close this. The balance in this account now becomes 0. We record it here. Then we move to this one, 100 and 100. Okay, zero all of these out, but then we go through and add these to get $1,466. Okay, so income summary is the account title. And then we have each of the individual expenses listed separately. The sum of credits equals the sum of debits here. Okay, this is kind of like what we were doing with petty cash, where you list out the individual expenses and then you make one credit entry. Okay, so it's kind of the same principle here. Okay, income summary goes first. Now, again, that income summary is special. Remember, I reminded you that the income statement accounts are below income summary and the balance sheet accounts are above income summary. Well, again, it's special here in that this serves as a section break title. So section 1, okay, starts with income summary. Section 2 starts with income summary. Okay, moving on. Section 3, record the net income. All right. Now visualize this as a T account. Okay. So what we have here, we have our net income. This is the section on the worksheet of $2,099. Okay. This is a debit entry. So what we are going to, let me move this out of the way. I got my picture here in the way. What we're going to do here is we're going to take the balance here from our worksheet and we're going to make the entry on our journal. This becomes a credit entry. Okay. We close this to capital. All right. Okay. We record this on our income summary as a debit, just like here, but we close this to capital. Okay. So we are adding $2,099 in net income to our capital account because that's the amount of extra money we had left over at the end of the month. Alrighty, so debits and credits, but you'll notice that, again, the debit entry is the first entry, okay? So that's section 3. All right. So, debit, credit. Right? Finally, the 4th step in closing the accounts for the month is to close the owner's drawing account. Now, you'll notice here that there is no income summary use and that Kim Park Capital is going to bump up to Kim Park Capital from the 3rd transaction. So yes, it is supposed to be there 2 in a row. Kim Park Capital, in this case, should be the last entry in section 3, as well as the first entry in section 4. Okay, it should be like that. You may see something different if there's a net loss, but for right now, we're operating under the premise that we had net income for the month. Okay, so very simple. We make a credit entry to close out the drawing account, which has a debit normal balance. And then since this reduces the amount of equity the owner has, we have to make a debit entry in the capital account. And that, ladies and gentlemen, is all we do. So in the prior set, we closed out the income summary account. Okay, this entry here, this $2,099 is what we had left over in the income summary. We've closed that out in step 3. And the final step here is closing out the drawing account. So we've touched every single one of our accounts at this point. So it's very straightforward. Okay, summarizer here. I didn't give you the answer for this, but this is how we would have ended up the lesson in class had we done this for real. All right, so let's go do this for real on Applia. This is going to be a little time consuming, so humor me. First thing we've got to do is we've got to set up our, all right, let's see, go back here. All right, so back to course outline, I need to pull up 8.2. All right. Well, it's a little finicky here, but we'll get to it in just a second. There we go. Okay. Now, what we're dealing with here is a completed worksheet. I've provided you with a completed worksheet. So all you are basically doing here is plugging in the entries in the appropriate section. So remember, we got to go update the general journal account for each one of these. This is the only thing that's even remotely messy about it, but I'm going to walk you through it. Okay. So first thing we do, I don't even need to look at this. Just need to plug in closing entries here. All right. Okay, so first thing we do is, this is going to get really cumbersome because I need to split screen and that's not practical when I'm doing this. All right, so what I'm going to do is I'm just going to narrate through this to make it a little more practical. I've got the worksheet up over here that I'm working from. And what I've got first here is our revenue account. So remember, we close our accounts with a credit normal balance first. So we've only got one, which is sales. Okay, and I do want to pull up the question here. Hopefully it's got it. No, it's not going to help me out. All right. Okay, so what we're going to do here is I'm going to start this over again. Okay, so closing entries. First, sales. So the balance in our revenue account, okay, was $5,511. All right. So what we need to then do is plug in income summary here. Okay, 5511. All right. So I'm going to scroll down and I'm going to go ahead and make the entries here. So sales, $410. All right, so this is February. Daggone it. It tricked me. 28. Okay. So what we got here, journal page 8, and we're going to make a debit entry. Okay. What have I done here? Okay, it's not my revenue is not matching up here. Which one am I working on? I'm working on the on your own. Oops, never mind. Well, I just gave you the answer to the first one. Let me get back to the work together. Yeah, busted. Okay. 8.2. Let's try this again. Sorry about this, guys. Here's 31st, sales. Okay, and then income summary. Okay, 5511 credit entry. So again, I put this on display. We're then going to go in and we're going to look here at the income summary. There we go. So 330. All right. So what we have to do here on the 28th of, on the 31st, is we've got to go through and then put the date in like normal. All right, so our post reference here, let's go to our journal page, which is page 4. All right, so for our income summary, what we are going to do here is make a credit entry for 5511. Now, new balance on the credit side, 5511. Okay, so we debit it, sales is closed. Let's go close it out. So 330. I'm kind of doing this backwards, but you get the point. Then we go into sales. So that's 410, 31st. Okay, so we've got to do debit entry here, 5511, 4. Okay, so debit, 0. Okay, our account balance is 0. The way you do this right is you put a single strike through on each side, and I'm just going to put a 0 here in each one to demonstrate that this is 0. Okay, you do the single strike through all the way across here. If you were doing this for real, that's the way this works. Okay, so that's what this looks like for step 1. Step 2, same deal. Okay, so let's go back here. We're going to use the income summary account again. They're going to back to back here because we're going to be closing the debit normal balance account. So I'm just going to go ahead and pre-fill this for the sake of expediency. All right, now, so we've got add expense. All right, we've got insurance expense. Okay, we've got miscellaneous expense. And then we've got supplies expense. Okay, so we got just those 4 expenses, which makes our lives a little easier. Now, what I was talking about with going through and backfilling this stuff, so our add expense here was 821. Then I'm just going to go through and do it this way because it's, again, the most expeditious way to do it. 300. And then we've got 347. Okay, and then we've got supplies expense of 713. Okay, so I'm going to go through and again do this for the sake of expediency. So we got 510. We've got 520. We got 530. Don't even have to look. You know why? Because these are listed in the order that they are in the chart of accounts alphabetically. So you start with 510, 20, 30, 40. Okay. Then you go through. Now, what's our sum here? Well, this plus this plus this plus this equals 2,181. All right, that's what this looks like. But we've got to go through now, and we've got to update the general ledger account. So let's do that real fast. So I'm going to go in the income summary first, and we're going to be looking at the 31st, page 4. So we now have a debit entry for 2181. Okay. And let's see, how should I enter this? I want to make sure I'm doing this right because it's been a while since I've done this. Income summary. Yeah. So since we still have a balance here, that's a positive on the credit side. What we do is we update the balance here. So 3330 is our new balance here. Okay. All right. So that's what we're working from at this point, and that's what we're going to use to serve as the calculation when we close out our net income. Okay. So let's go back to our expenses and get those done real fast. So we got add expense, 31st, or we got a credit entry of 821. So you close credit to credit. All right, 0. there. Okay. All right, and then let's go through and let's look at our insurance expense. So same deal, 31st, or credit 300, and then 0, 0. And then miscellaneous, same process, rinse and repeat here. Post reference 4, credit entry 347, 0, 0. Okay, and then we go back and we close out our final one here, which is supplies expense 31, 4, 713, 0, 0. Okay. That section's done now. All right, so finally, step 3. What we are now going to do is we're going to put the income summary again here. And the 31st income summary, 330. Okay. And then our Darlene Wong capital. So we're going to put our owner's equity account here. Okay. So we now have net income. And what we've got to do with net income is, well, since we have income summary and we have net income, we're going to make this entry first. If we had a net loss, Darlene Wong would go first. Okay, so since we got 3330, which is our balance on our income statement account, and I'll go prove it to you. Okay, there we go, 3330 right there. So we're going to make another entry here. I'm just going to do it right now since we're here. Oops. All right. So we got to do a credit entry, 3330. Sorry. So 0, 0. So we make our credit entry here and our debit entry here. And then we make our credit entry here. Okay, Darlene Wong, 30. Let's go to Darlene. Okay, Darlene Wong capital. Now, here's where it's tricky. Okay, 4. So what are we doing here, guys? Well, what we've got to do is we are increasing. Okay, we're increasing. All right, and let's see. I'm going to look this up so I don't make a math error. I'm not going to use a calculator, guys. Darlene Wong, capital. Okay, so it's 9873. All right. Okay, so then we go back here, Darlene, 310. Now, that's section 3. Very straightforward again. Credit to credit. Okay, credit to credit, since it's credit normal balance adding. Okay, finally, now we're going to close out the drawing. So, long capital comes first. Why? Well, we're going to make a debit entry to the capital account. So we're going to set this back up now. All right. And I'm going to go ahead and make this entry here. Shoot, I can't. Hang on a second. Darlene drawing 2100. All right. Since we're right here, I'm just going to go ahead and make this entry. So on the 31st, 4th. Okay, we got 2100 that she took out of the business. Okay. So 2100. And then that reduces Darlene to, I think it's 6773, but let me look to be careful. Up 7773. Okay, so we got a net increase in our net worth. And then finally, Darlene Wong drawing. Okay. And I think that's 320, but I want to double check. Yeah, Darlene drawing. Okay, so on the 31st, page 4. So we now have to make a credit entry here to close this out. Our balance is 0. That, ladies and gentlemen, is the end of the fiscal period. So what I want you to do is work through this using the PDFs. Take a picture of this and then post it to Schoology. Now, this is tedious in Applia, but again, I hope that this works out for you. The keys have been posted with the assignment for this particular problem. So if you have questions, rather than listening to me and I'm trying to figure out in the video, just go directly to the keys and use that as a resource. So you should have everything you need at this point, probably more so. If you have any questions, office hours are 11 to 1. Send me a remind, easiest way to reach me. And then we'll do another Zoom call on Tuesday. So have a great Memorial Day, and I'll see you next week.